today on the Tearsheet Podcast.
If you're going to, and you want to migrate customers to digital channels, whether that be, ATM or mobile, name the digital channel. If you want to do that, there's a significant cost associated with an upfront development, but there's also a significant cost in doing business that way. So, by our analysis, internally, I think B of A uses the $5. We use about $4.20 if I was to go in and make a $20 deposit with you, Zach, as a teller. Okay,
Mm-hmm.
so it costs the bank about $4.20. If they do it at the ATM, and you can migrate that same $20 deposit to an ATM, it's let's call it 80 cents, something around that. Okay, and of course, if you go to mobile, then you're down to 15 cents or maybe even less, depending on scale.
Welcome to the Tearsheet Podcast. I'm Tearsheet Editor-in-Chief, Zack Miller. As we've discussed numerous times here on the podcast, the pandemic has accelerated a lot of digital trends that were already underway before COVID-19 ever hit. There's been a big push away from cash and towards contactless, but major U.S. cities are pushing back on cashless retailers. So where will all this lead? Diebold Nixdorf's Simon Powley joins me on the podcast to discuss integrating physical currency and digital tools. Drilling down, we look at the durability of cash and ATMs as a banking channel. Powley shares insights from his work with major banking institutions around the U.S. about the future of cash and banking in general. Simon Powley is my guest today on the Tearsheet Podcast.
My name's Simon Powley. I run up our what we call our global advisory banking group here at Diebold Nixdorf. So we do a lot of thought leadership and project-related things for financial institutions kind of around the globe. My team does. So yeah, it's great. I'm a banker by background. Worked for Bank of America for about 15 years, running large markets for retail, small business, and was a chief retail officer of about a $15 billion bank out here on the West Coast for a while, and then move over and ran the partnerships for merchant acquiring for WorldPay, now FIS. Before joining this organization and doing this job, which is a great job. I'm enjoying it.
Great background. How long have you been in your current role?
Oh, let's see. Gosh, about 3.5 years now.
Awesome.
Yeah.
I'm kind of curious, Simon, how your experience of being a banker, I guess, informs your work today on the Diebold Nixdorf side.
Oh, every day. There's no question. I think, there's always roles in every organization where they're looking for subject matter experts. I hate painting myself with that kind of brush, but I guess I'm getting old enough now to where my experience is starting to gravitate towards that a little bit more. So I use it on a daily basis, really a lot to keep our organizations or as important, if not more important, our customers kind of up to date on what's going on in the industry. And if you haven't been a banker, in my opinion, or don't really understand that, it's such a unique environment, and they have their own language, they have their own ways of doing things. Certainly the financial impacts are almost reverse of a lot of the ways that traditional companies think about things. If you don't have that background, it's really hard to understand what's going on out there and to really feel the depth and the magnitude when events like COVID, for instance, happen and really what happens inside an organization. So I bring that to our customers just to kind of share best practices. Here's what's going on in the industry. Here's what's happening. And so I can speak their language. And internally, we've got a lot of really, really smart people, clearly a lot smarter than me, that are really gravitated more towards, software, hardware capabilities that are always very anxious to tailor our products and services as solutions for our bankers. And if you don't really understand the environment or what they're truly going through, sometimes it can be hard to, number one, I guess, develop the product the right way. But number two, to really describe the value proposition and articulate that appropriately to them. So I do a lot of that. That's kind of my day-to-day business.
That makes a lot of sense. So can you tell us, I guess, from your perspective, what are bankers feeling right now? Where I guess COVID hit in March, so we're 8 months, almost into it. What are they feeling? What are their biggest needs, the people that you're talking to?
Well, from a kind of a macro level, I think there's, uncertainty. I think the good news is, even for generational bankers, we've been through hardships before with the Great Recession in 07, 08. So there's there's some, what my mom always described to me as a little bit of muscle built up there on terms of being able to react and understand the environment a little bit. So I think there's uncertainty, certainly a lot of change, which, traditionally banks don't do well, and I hate to paint everybody in the same brush, but, certainly the medium to smaller organizations have struggled with that. So the change that's really going on within their consumer bank and driving the changes that I think a lot of institutions either have grappled with or understood that they needed to, that maybe haven't made the investments or really, taken on the direction of where they need to go. I think they're feeling a lot of that right now, the anxiety around that, and what to invest in. But it's not. So there's kind of a couple things. One, I think we have to understand the financial impacts of this. Interest rates at zero, certainly tough from a margin perspective.
Mm-hmm.
Right now we've got consumer loans that continue to, fly off the shelf. I'm up here in the Seattle market and, pay a lot of attention. I have a lot of banking friends up here that tell me, just how hot the market continues to be, which is helpful. But from other loans and other margins perspective, it's very, very hard to lend long term at these very low rates. They're flush with deposits, that they aren't really interested in when you got the Fed window open at zero. Having a bunch of deposits on there at a reasonable rate for your customers is challenging for them. So there's a lot of things. I guess what I would say is just around profitability, right? And to add to that, the uncertainty of when are we going to get out of COVID and what are the real impacts to my commercial loan portfolios, during this particular time, because there's certainly deterioration there. And I think a lot of them are, kicking the can down the street a little bit, so to speak, because
Mm-hmm.
they don't want to, they haven't really truly, realized the impact of this, but they will soon. There's only so long you can keep these, loans as non-performing assets, as on your balance sheet before you really have to kind of, take some actions, at least under, current rules. And so,
Mm-hmm.
as opposed to just deferring loans, having to actually take action on them. So that's causing a lot of uncertainty. And then you've got the change, I guess, where I go next. And, from the digital side is, you've got the change in consumer behaviors. We've been paying a lot of attention of what are consumers doing, where are they going during this particular time, and what are they going to gravitate to? So what's the future behaviors and what are they really going to do? Because I think a lot of times, what my team, I think appropriately does is, okay, here's what our, surveys are saying. Here's what our customers are saying. Here's what the ecosystem and, all the publications are saying out there. And sometimes what people do is different than what they say they're going to do, right? And so that, are people going to go back to, what we call the traditional behaviors of branches and so forth, or interacting physically rather than go down this digital channels? I don't think so, but there'll probably be a little bit of that. So,
Mm-hmm.
they're grappling with, all right, so what are the hot investments out there? What do I need to make? How do, for the kind of, what I'd say, mid-sized banks who really feel like their, value proposition is its interactions with its clients and those personal relationships that they feel as though they can do a little better job with, or be a little bit more personalized than with the large, the big financial institutions that, leverage technology or, other resources to them differently to establish a relationship. I think they're kind of scratching their heads as well, because when you've got, these large institutions that are becoming so technology oriented and investing so much in that, and consumers are gravitating towards that, how do you really differentiate yourself, right? And really kind of keep your identity and keep your customer base, and not just the older customer base, which the kind of regional banks traditionally have. How do we, recruit and, get a younger, demographic and attract new customer base at that level? How do I compete with that, especially when things are accelerating the way they are?
And do you have an answer for all that, Simon?
Well, certainly I don't have all the answers. It's a challenging one.
Of course. Well, where
Yeah,
where,
go ahead.
where do you advise them to start? Meaning, what's your position, I guess, as a professional, as a company? Will things go back, to at least sort of resemble what they looked like before, with the role of the branch, and at least the decreasing role of the branch, but important in certain models? are we moving further and just we hear from a lot of guests that we're totally accelerating the move towards digital. So like, I guess what's your stance on that? And then given that, like, how do you work with your clients?
Yeah, well, that's a lot of questions. So let me kind of unpack it a little bit. One, yes, we have certainly seen, as it sounds like your other guests have as well, that there is an acceleration towards digital. First time users, I think the thing that's really interesting, and we do a lot of project work with, our institutions to not only provide thought leadership, but as they're integrating these services, what are the critical things that you need to do within your institution to really drive adoption to these and make this stick? And really, that's where we do a lot of work, is the analysis and an ROI modeling, right?
Mm-hmm.
So if you're going to go, let's take deposit automation for example. If you're going to and you want to migrate customers to digital channels, whether that be ATM or mobile, name the digital channel. If you want to do that, there's a significant cost associated with an upfront development, but there's also a significant cost in doing business that way. So, by our analysis, internally, I think B of A uses the $5. We use about $4.20 if I was to go in and make a $20 deposit with you, Zach, as a teller. Okay,
Mm-hmm.
so it costs the bank about $4.20. If they do it at the ATM, and you can migrate that same $20 deposit to an ATM, it's let's call it 80 cents, something around that. Okay, and of course, if you go to mobile, then you're down to 15 cents or maybe even less, depending on scale. So you can see that the ROI gets developed there, and so there's a tremendous amount of interest in doing that. Not only that, we are finding that consumers want to transact digitally, and that's certainly being proven out during COVID. And they want to interact with, say, a subject matter expert, say a business banker, mortgage rep, or investment person in a branch. So the branch is not going away, but there's certainly this, let's do simple transactions in a digital way. Consumers want to do that, and as I just described, there's an ROI, and so there's certainly something for banks to do to help support that. And so we talk a lot about that and do a lot of current state assessments and project work to be able to help them with that. And really that's designed to make them successful, right? So when they buy a hardware software capability from Diebold Nixdorf, we want them to be successful, right? We're their partner. And so we've got a vested interest in that. And so when we do those kinds of things, what I think you find from that is that the customer adopting and using that technology a couple times themselves. So, demonstrating that technology or using that technology, certainly the customer will then see how easy it is and really gravitate to that technology over and over again to drive that adoption. Okay. And during COVID was a perfect test case for that, because in some cases you didn't have an option. And so not only were branches, decreasing in time slots, and sometimes they were closed. And then we saw a lot of creative ideas from the financial institutions on how to drive awareness or adoption to this digital technology with their customers. And so that was really cool. So what I do think is that got accelerated because in some cases, really some of the reason, because of those things. They've used it now. They've seen how easy it is. They're believers. They've downloaded the app on their phone. They've leveraged this capability, and now in the future, they're seeing how easy it is. And maybe even right now with COVID, I mean, we're certainly not out of it. Gosh, do I really want to go in and interact with a person at the bank when I can just, use the safety of my mobile device or, a clean ATM to make my deposit or withdraw, so I don't have to interact during these times. So we have seen that. So I believe there is a downstream effect, and we'll continue to see that adoption. From an impact perspective, I do believe there always will be a retail outlet for banks. I think there's no question the value there. I think what they use the branch for will be differently. The way I kind of describe more around, let's say, marketing capabilities or interacting with those subject matter experts, not the traditional transaction that we've seen in the past. And so those digital capabilities will continue to be developed. And I think you need to have a really good mobile app and certainly have access to ATMs or those kinds of things for consumers to be able to do that. Will they completely replace the branch? No, I don't think so, but we'll certainly see that continue.
What about the role of cash? Obviously, the data that we saw, COVID hit and the fear around cash and maybe the transmission of disease that way. We saw contactless from different vantage points. Usage has gone up highly. Like, where do you think? I guess that move. Where are we? I guess on the spectrum towards like a cashless society, and is that a reality? What's your viewpoint on that?
I don't think so. It's two things. One, I think it's very interesting too. I use cash from time to time. I've got teenage daughters, so it just seems to fly out of my wallet before I get a chance to use it. So I have a tendency to have to use my plastic a lot. And so, I'm not for one a big cash user, but from time to time I do need it, and it seems like I've always got it around. Two things I would say is one, when you talk to financial institutions and banks, like I do every single day. When you talk to the folks that actually deal with cash in the branch, it's still a pain point for them. So they still are using a tremendous amount of cash, and it's the cash flow and the way that they use cash is still an important thing. So it's still a big focus for banks, and they are still using cash. So from a digital perspective, I kind of take that as, all right, we're still using a lot of cash out there because they're talking to us about this in the orders. The other thing is, I guess it was about a month or two ago, I was listening to some information from the Fed, and they were talking about that there's more cash in circulation right now than there ever is. And I mean significantly more. And the way it came up with me is around delivering and so forth with branches. And they were talking about actually the Fed is not recycling bills. Like, traditionally, Zach, when you take, ones in, you want to ship them back out to the Fed because they're in circulation, they get in bad shape, right? And so you want to keep it around, and so you get fresh bills. Number one, they were not able to recycle them as much as they would like, or take the cash back. Number two, what I heard from banks was when they were getting the cash into their vaults and cash in, they're printing cash so fast at the Fed that a lot of times they're hearing the ink crack in the bills when they're taking them apart because they literally can't produce cash fast enough. So when you take some of those data points, and those are recent, there's a lot of cash still in circulation out there and being used. And we're also seeing, and you probably heard a little bit about this, major cities, like I mentioned, I'm in Seattle. And so, cities like Seattle or San Francisco, New York, really talking about more of a, maybe disparate impact of a cashless society, and how that impacts the less fortunate to be able to do that. So I think, and we've certainly seen that over in Europe as well, is, there's a real impact to not only financial institutions and consumers, human beings, when you don't have cash as a currency or the ability to leverage that, but also I think there's a risk somewhat to government entities when you don't have cash available to you. If we were to go completely digital, obviously I think we can all think about what that would really look like. There's some challenges there and some risks associated with that. So I think we're a long way from a cashless society. I think it's still an important part of life for us. And will we get there one day? I don't know. I don't think so. I think we're way off if we are.
Got it. I guess a corollary question is the role of ATM in today's market. Branches were closed. Obviously, the ATM was literally either that or mobile or digital channels. Like that was the only way you could interact with a bank. Where do you guys see the ATM playing a role in the future in terms of is it a branch into itself as we were seeing as branches closed and sort of just ATMs acting as like the imprint or the footprint in the local community? Where I'm just asking a lot of different questions here, but where do you see the ATM evolving to?
Well, I think we've already seen it. I think, it is certainly a tried and true and trusted measure, globally, in terms of being able to have accessibility to your finances in cash, specifically. Deposit automation, I mentioned that a little bit earlier. I think, we just did some recent surveying, and, a lot of US banks feel like the ATM can certainly replace a branch. And what I mean is not, eliminate branches like I mentioned a little bit earlier. It's more around, okay, if we really need something to be able to transact, do we need as many branches? And so instead of having, 3 branches over in this particular geographic area, can we have 2 branches or 1 branch or whatever, and replace that with an ATM? In a lot of cases, the answer is yes. And the reason for that is, if you think about the original ATM, all it did was, you put your PIN in and your card in, and you put your 4-digit PIN number in, and it dispensed cash. Now it can do so many different things. So, not only can you make obviously a simple withdraw, but you can make a deposit in it, right? And very effectively do deposits. You can do multi-denomination selection. So, where you used to say, okay, I'm going to go to the bank to get 20, or to the ATM to get $20 out, but I need, I'm going to send my, granddaughter a Christmas card. I need a 50. I've got to go into the branch. Well, now you can do multi-denomination, where you can, begin to take, multi-denominations out of an ATM. That's handy. It's another friction point early on with driving this kind of adoption to the digital channels that's been eliminated. They now have recycling capabilities. So for banks, when you go in, Zach, and you put your $45 in tips into the machines in 1s and 5s, the machines can now recycle that. And the next person that comes up that needs 5 1s is taking your 5 1s out of it. And so there's a lot of efficiencies to be able to do that. But also, marketing capabilities. And I'm not just talking about a dumb screen saying we've got great car loans. I'm talking about bin level targeted offers to your customers that are smart, based upon what you want to offer to them, based upon who they specifically are, and knowing your customers extremely well, which is much, much different, in signing up and following up and those kind of things, much, much different marketing. And by the way, not just product sets, what we found during COVID is, being able to say, here's the hours of our branch, or here's ways to protect yourself during COVID. So a viable way to communicate with your customer that, I would argue, and, owning branches for years, and running branches for years and years, for a very complex organization, those interactions can be better. I couldn't always rely on my tellers to, not only just count cash, but to make a very good targeted offer based upon clues and cues my customers had to try to help them financially. I can always rely on that. Well, now you can do that through a machine in a way, or add video, as a service onto your ATM, where, if you need additional help or support, it's there on the screen for you. And I think in today's environment with Zoom, we're all getting a lot more comfortable in understanding the value of being able to use interactive video like this. So putting video on the machine. So when you put all of those things together, I think, the ATM's role, I even like the ATM, I think probably need to rename it to something else. I think it's just something we're comfortable with. We can do a lot of things, and you can begin to leverage this as, a leave behind. And like I described before, for a branch, you may be able to put an ATM in a new market you want to go into, the way I just described, in kind of a cool location with a cool layout, and have it be a fully automated branch. Keep yourself protected, keep your customer protected, and still be able to handle, all of these things. In Europe, for instance, or Middle East, they issue checkbooks, they issue debit cards. I mean, they really are full service kiosk. We just haven't really gotten there for the most part in the US market, but it'll probably come. I mean, they're a little bit ahead of us. So I think the downstream implications of how you can leverage this and really viably help and support your customers, especially now in the age of digital adoption, is really unlimited. So I feel like we're going to continue to see that adapt. There's people a lot smarter than me that are developing this technology. So we'll see where it goes. But I'm a big believer. There's a lot of it downstream to be able to leverage, and it doesn't have to be your only digital strategy. I wouldn't say it's solving for all of your customer solution, but I think it is a real viable part of your digital capabilities and your digital offerings as specifically a financial institution, if not a retailer, for a very, very long time.
Simon, thanks for joining us on the Tearsheet Podcast today.
Yeah, it was a pleasure.